Hey guys, this is Cory here with Money Talk and my 5-minute wealth tips. So the next question I want to talk a little bit about is, I get this all the time. Cory, when's the right time to take income? And more importantly, how much do I take? Well, let's talk about this for a second. When it comes to your overall planning, income is a big part of retirement. But here's what I want you to understand. You want to do it the most efficient way possible. Let me explain what I mean by that. So let's imagine, for all intents and purposes, you're taking out about $70,000 a year, okay? And that $70,000 a year that you're taking out is enough to cover your expenses based off of you basically spending maybe $4,000 a month, okay? So not too bad, got some excess money left over and things of that nature. But here's where the problem comes in. A lot of you are now being forced to take RMDs, and that RMD is now forcing you to take more income. What does that mean to you? Well, that means at the end of the day, yes, you have more money disposable sitting in your account, but here's what the problem is. That extra $20,000, $30,000 you took out just took you from one tax bracket to the next tax bracket possibly, because you added an additional $30,000 to your overall income. And now that you have $100,000 in income coming in that you didn't need, but IRS said, hey, you reached the age of 72 at this point in time, and now you need to start taking that income out because if you fall into that provisional time frame, now you got this extra income that you're now paying taxes on, guys. And this is what we're trying to avoid. So one of the strategies that we want to look at is that when we know when your RMD time frame is, we'd like to go anywhere between 5 to 7, maybe 10 years out in that time frame. By going that 10 years out, here's what gets to happen. We get to determine when we want to take the money out and take it out proportionally when we want to take it out and how much we want to take out. This is so we can control what the tax liability is. See, here's an example. Let's say if I was 62 years of age and I didn't have to take my money out to 72. That means I got a 10-year period of which I could start converting and taking money out and converting that money to hopefully tax-free income. But let's just say I needed to start taking that income out. Well, here's the thing. As I take that income out, I can pay the tax on the portion that I'm taking out over a 10-year period instead of when Uncle Sam says I need it out based on their time schedule because you waited to the full retirement. This is why the strategy makes so much more sense, so you have more control of what taxes you're going to pay. By doing that strategy, we then can look at the funds that we're paying and make sure at the end of the day we're paying the portion of the taxes that we want to pay, not what the IRS is making us pay. You are in control. You choose how much you're paying over that period of time. This is a simple strategy on developing the best income plan possible. See, it's not so much just knowing how much money you need and knowing that you have enough income in that place, but it's also about not being forced to take more than you really need and paying more taxes on the income that you need, right? So guys, this is what we're sitting down focusing our attention on. Make sure you come into the office and let's run some numbers and find out when's the best time to start your distribution process so that you can start reducing your tax liability for the future and start taking it now while you're paying a lower tax bracket. Guys, taxes have not been this low in a couple of decades. This is why we want to take full advantage of it now before that sunset provision comes into play and all of a sudden we're stuck and forced taking out more of that income than we really needed and paying higher taxes. Okay guys, so this is my 5-minute wealth tip from Money Talk LA. I hope this was some good insight explaining to you about income and when you should start taking income, but more importantly, how you should start taking the income. If you have any questions about this, want to learn more about tax strategies, income planning strategies, please feel free to contact the office or click the link below and schedule a time to meet with us in the office. All right, guys, be well and blessed. I see you on the other side. As always, I will talk to you later. Bye-bye.